Hello traders, did you know that EURUSD has just broke through a very important support and resistance level? Join me as we take a look at the charts. Hello traders, my name is Jacques and we're currently taking a look at EURUSD on a 4-hour time frame. As you can see, the market made a low here on Valentine's Day and then started making a very nice low volatility consistent uptrend up until around about the 8th of March over here. And then, as you see, the market gradually started moving down with a few very big candlesticks, as we can see there, and then, of course, this very strong move to the downside. Now, currently, the market has just broke through the 1.08 level. Now, this is a very strong psychological level. And as you can see, the market broke through this quite cleanly and at this stage with conviction. Now, what do we mean when we say the market broke through with conviction? That basically means that there's a very strong candlestick, usually a little bit larger than the other candlesticks. That's firstly. And secondly, we don't have this big wicks over here, which usually indicates some indecision, also some sideways movement. So as you can see here, for instance, there's some sideways movement and a lot of big upper and lower wicks. All right, so this is the opposite of a convincing and convicting move. So currently what we see here is at this stage quite a strong move. However, we still have a few hours left before this candle close, since it is a 4-hour time frame. So we will have to wait for the close. And if the market maintains that convincing move to the downside, we can definitely target some of the next potential levels. The first, which will be the 1.075 level. This is a strong support and resistance level. Right. Now, also something to note is we have the moving averages here. In yellow, the 200, blue, the 100, and in green, the 50. And these zones, as you can see here, are also fairly strong support, dynamic support and resistance zones. A lot of times the market will go into this zone and then reverse. Into the zone and reverse. Basically just a touch of the zone, reverse, as you can see here. And then the same when we break through it, you can see a nice touch on this level, another touch on that level. Then a breakthrough and retracements close to these moving averages. So this is also something to watch out for. Now, alternatively, if the market does not maintain the momentum to the downside, we've got a nice Fibonacci over here, and we can expect usually the 23.6% retracement level is usually a strong retracement level in Fibonacci terms. Another one is the 38.2. Now the 23.6 level coincides again with the strong support and resistance level, the 1.084 level. So if the market does not maintain downward momentum, we might see a retracement to this level, and then perhaps this will also coincide with that zone between the 100 and the 50 moving average, and then we might continue or to see the market continue down. So basically at this stage, we're just waiting to see if the market might continue down straight away, or in the short term, it will first do a bit of a retracement. However, in the long term, ladies and gentlemen, as depicted by the moving averages, we are in a downtrend. We can see this continuous lower highs and lower lows, as you can see here. Now, with that said, our bias to the downside will be invalidated if the market start breaking convincingly above the 38.2 level or the previous high over here. Now, that level, ladies and gentlemen, is around about 1.085, right? So if the market starts breaking above this level with conviction, our downward bias will be invalidated. So, ladies and gentlemen, I hope you enjoyed this video. As always, safe trading and see you soon.